Bankers beware, embrace exponential technologies, or face extinction. It sounds very dangerous, doesn't it? Let's introduce the panel. Karen Pascoe, if you could come out first. She's head of emerging payments at MasterCard. Take a seat right here. MasterCard, I think, is, everybody knows what MasterCard is, right? Right. Elliot Weissbluth, come on out. He's the CEO of Hightower. Hightower is an asset management firm, generally speaking, right? We'll go more into that. Thank you, Elliot. Sidhu is the CEO of Customers Bank. Have a seat. You may remember he used to be the CEO of Sovereign Bank a long time ago, and he's got a new bank. And then Ben Milne is coming out. He's the CEO of something called Dwolla that we're going to hear more about. Thanks for coming, folks. Not that I judge books by their covers, but if you were going to guess what the most potentially disruptive CEO on the set was, who would it be? Good to have you here. So I want to make sure everybody understands what everybody in the panel does, or what they hope to do. What was interesting about putting this panel together was we were hoping to get people who were, it's really hard to get companies that are filled with Luddites to admit that they are going to be disrupted or that they're not dealing with technology. So we had a lot of no's, right? I mean, we had to find really forward-thinking people to be on this panel. So even though we've got what you think is a traditional banker and a traditional company and a traditional asset manager, they are disruptive in their own ways. So that's a little bit of a tease. So let's talk about what each of these individuals do, and then we'll go into the deeper issues of facing possible extinction. Ben, let me start with you. If you will allow me to describe the way I see your company as a customer, and then you can either correct or amplify that.
Sounds good.
So I'm in the middle of a renovation, and the way I pay my contractor is I go on my HSBC website, and I tell them to cut a check, and at the close of business, or maybe the next morning, they actually physically mail it to him, I'm told, and he gets it in the mail, and then he deposits it, and then we wait for it to clear. If I go onto Dwolla, and I do have a Dwolla account, got one yesterday.
Thank you.
And if he had a Dwolla account connected to each of our bank accounts, I would go on, I'd say, pay Danny Murphy X, too much, and he would get it in 1 second. Do I have that correct?
In some cases, yes. In some cases, worst case scenario, there'd be a little bit of a delay like you would have if you have a merchant account, you swipe a card, you're the merchant, you get paid a few days later. So worst case, there might be a little bit of a delay, but if our core technology is enabled on both sides, it just moves in actual, true real time.
How come it's so fast compared to everything else?
We really just kind of started over. So how many people have a plastic card in their wallet? I mean, I've got like 3, and that's okay. We basically just do what a plastic card does with the internet. And the internet as a big messaging system allows new efficiencies and basically allows us to get money from point A to point B really quickly, without the actual physical card.
How much does it cost me to pay the contractor?
Our consumer system charges 25 cents a transaction if the payment is between $10 and $1 billion. And then if it's under $10, it's totally free.
How does that compare to card fees, et cetera?
Well, I mean, it's much lower, right? I mean, it's less than a stamp, but
softball.
The reason the company was started was as a merchant, I was paying about $50,000 a year in credit card fees with an e-commerce company. And when I started researching ways of getting paid without paying those fees, I couldn't find one. So I sold the other company and started this and haven't gone broke yet.
Is there somebody on this panel that's more threatened by you than others?
I actually think that we probably think very similar in a lot of ways. The difference is Dwolla cheated in a lot of ways. We started over with the internet. We didn't start at scale, where a lot of these guys are managing scale. They're building on existing infrastructure. And our job is, how do we bypass all that with new technology?
How do I can't go to a store yet and use Dwolla.
To about 35,000 merchants around the country, you can. So the network is small, but it's growing, and I think we serve a little over 500,000 people in the United States today as well.
And if I live in Iowa, I can pay my taxes with Dwolla?
You can pay your taxes with Dwolla in Iowa. We have multiple state government customers, and we're working on a few federal-level deals as well.
Okay. We're going to talk more about the implications of when transaction fees drop so dramatically, but let me get to Jay. Jay Sidhu is CEO of Customers Bank. But that's just like passé for him.
Customers Bank.
Customers Bank. Because I'm much more focused on your new company.
Yeah.
Mobile Bank, have I got that right?
Bank Mobile.
Bank Mobile.
Right.
No infrastructure, no
Right.
branches.
Right.
How do I sign up?
Take a picture of your driver's license. We'll ask you 3 or 4 questions, and we'll give you absolutely free banking services, unlike anybody else who's asking for minimum deposits. And, can you imagine $32 billion are being charged by banks in overdraft every single year? That's 3 times how much we spend on lung cancer as well as breast cancer combined. That's almost half of what America spends on food stamps. That's how much banks are ripping off consumers. Why are they ripping them off? Because they built all these Taj Mahals. Okay. They built all these Taj Mahals on every single street corner because they were expecting customers to come to these billboards that they have, and if we build them, they'll come. Okay? And what do you realize now? Customers are saying, why should I come? You give it to me. Dwolla is given to you in 1 second. Banking can be delivered to customers on their cell phones, on their iPads, and on any kind of a tablet, any kind of a device instantaneously, and accounts can be opened in 2 minutes, not 25 minutes. You can buy a ticket around the world, all right, in 2 minutes, but it takes you 25 minutes after you stand around and talk to some stupid banker. That's how.
How do I deposit my first round of money in your bank?
You deposit, you just take a picture of your account statement, you have a picture of your check, it's deposited. Accounts open, done.
Wow, cool. What do bank branches add to the cost of a bank? If you get rid of branches, what does that do to margins?
For an average customer, just so that you keep your money in a bank, the bank is spending between 2 to 3% of your deposit on just overhead. And how much are they paying you? 10 basis points to 25 basis points, and they're paying the landlord 10 times that. So find a way to cut the landlord off. You will make more money, and the bank makes more money.
How many customers do you have?
We have 1.1 million customers already, and we started 4 years ago.
Are any of them over the age of 50?
Here?
Not many, I bet.
About 15,000 of the 1,000,001 are above 50, and the rest are below 30.
Middle 30s, yeah, all right. Elliot Weissbluth, Hightower. You managed to raise money in 2009. 2008, even worse.
Yes.
In the middle of a financial crisis.
Yep.
To start an asset management firm.
Second largest PE deal done that year.
But who's bragging? Why are you think you're a disruptor?
Well, we are a disruptor.
Why?
If you take a look at the traditional bank brokerage model, and by the way, I'm really happy I'm not a traditional banking business with you guys to my right. The traditional bank brokerage model has sort of financial advisor brokers that face off to the client. It has the manufacturing component that has all the products and all the services, and then it has the safekeeping, the custodial sort of security where you deposit your assets. Because of that fully integrated model, it's rife with conflicts of interest. The client's interest is usually not the leading cause of decision making. We said that model needs to change. We launched a business in 2007, raised money in 2008 that basically lifts out the servicing piece of providing advice to people in a completely conflict-free way. At the same time, the infrastructure that we've built allows us to access Morgan, Merrill, UBS, Goldman Sachs, Schwab, Fidelity, JP Morgan, and cause all of those firms to compete for our clients' business. So we've disintermediated the internal conflicts of interest. We've created a fiduciary model that focuses only on the client, and we don't make any money from any other ways that cause conflicts of interest. So it's not just legal and marketing and branding, it's also an economic model.
Where does your revenue come from?
We provide advisory services to our clients.
So a percent of the assets?
Correct.
What percent of the assets?
It varies from 20 to 100 basis points.
So if I currently have an account at JP Morgan, another one at HSBC, do I just take all my money away from them and give it to you, or you bring them together in what I see as an online platform?
Yeah, it depends. I mean, you could be a former client of one of those firms. You might join our firm, and we might take a look at what you're being charged and say, it doesn't make any sense, let us give you some other recommendations. Or you could come to Hightower as a brand new client, and then we would give you recommendations about where the best place your particular types of accounts or servicing requires. Typically, the clients have points of view, right? They have a 401k with Fidelity, so they want to keep their assets at Fidelity, or they want to do business with certain firms, and then we facilitate those transactions. But the account, actually the custodial source of the account doesn't stay at the Merrills and the Morgans and the UBSs. That moves to a third-party custodian.
How are you getting advisors? Are you doing roll-ups, or are you?
Both. So we launched the business by lifting out the large corner office teams from the most prestigious Wall Street firms. 2 years ago, we liberated them. 2 years ago, we launched a model that allowed these teams that wanted to be free of the conflicts of interest to start their own business. And so we have a platform that says to these teams of advisors that are leaving the big firms, set up your own shop. We'll be an omnibus service provider to you, and you can avail yourself of our entire platform.
Did they have to conform to your fee structure?
No, actually, we support the autonomy of the financial advisor. So in many cases, a financial advisor will say, this is a friend of the family, this is a referral source. We don't want to be told what to charge. We support that entrepreneurial
But they could charge more than what you were saying before,
well,
right? They have that option.
The compliance, the rules and regulations that we conform to via the NASD and the SEC require us to disclose maximum fees.
Okay.
And so you can go online, you look at our ADV, you'll see the maximum that anybody can charge for a particular type of account.
Karen, at MasterCard, you were in charge of emerging payments. What does that mean?
So the digital space really gives us the biggest disruption that our industry has really seen since the introduction of plastic cards 40 years ago. And so it's a capability of really providing consumers more capability to transact, to have commerce, to be able to use digital as a form of identity to get value-added services. Right? We do a lot of work with governments as well as merchants and issuers and some of the digital giants out in this space, and seeing lots of innovation overall. Where MasterCard comes in is the ability to really enable digital commerce in ways that add value for both consumers and merchants, for clients and customers of issuing banks, with a scale to solve some of the challenges that we're really seeing in that space.
Can you give me an example?
Well, so if I'm using one of the digital wallets that's out there now, there's so many steps in between me and trying to transact that it's really not that much faster than using a plastic card and swiping or going for a contactless payment. But when we start going down the road of getting better digital identity, of getting better biometrics, and with the phone, we're really starting to enable consumers to transact in commerce locations and quick service locations to just tap their phone and go the same way you could with a plastic card. And so really creating speed and convenience.
So Visa doesn't have the following problem, which is, what do you do with MasterCard when the card doesn't exist anymore?
Well, there's a lot more to the brand than just the card, right? So if you think about MasterCard, it's 1.9 billion cards. It transacts in 150 currencies. We have connections with 22,000 financial institutions, and we're in 220 countries. So tens of millions of merchants accept MasterCard. So what you're really dealing with from a merchant's perspective is you're providing acceptance and a connection in between this massive base of consumers, right? Being able to enable that with the capabilities that you have in digital is a phenomenal opportunity.
Are you terrified of Ben?
Yeah.
Why not?
Well, so getting connectivity and being plugged into 22,000 financial institutions, scale in so many countries, is an incredible asset that Ben and his very talented team it would take some time, right, to really amass that scale. But I think, what Dwolla is doing and all of the disruptions that we're seeing in the payment space, because it's significant. There's a disruption every 30 minutes, I think, at this point. It's really interesting to see new models and for people to look at ways of streamlining what had been considered standard practices there. So, MasterCard has a lot to learn from Dwolla.
Should she be terrified of you?
I mean, I think there's a lot of opportunities for collaboration. I mean, MasterCard has a lot of nodes as the network. I mean, the way that I kind of look at the world is that merchant locations are just GPS coordinates, and your phone is just an internet connection, and you can talk about a wearable or anything else. Like, these are just internet connections. And all a network really is me saying, I am here, and then money on the other side getting from point A to point B. And there are a lot of deployed connection points out there. We haven't done any integrations with major existing networks yet, but I do think at some point there's going to be some overlap, and it's something that I don't think we'd fight it as long as it made business sense for everybody.
People who've been here all day saw a presentation on Bitcoin. And you talk about the ability to move money in an almost frictionless way, a costless way. That's a big selling point for Bitcoin. Why are you different?
Yeah, I mean, Bitcoin as a currency is a good example of there will be new currencies created. I don't think anybody would argue that. And on the crypto side, maybe we would want to go into Litecoin, but if we just think about currencies in general, there are lots of currencies in the world: peso, yuan, dollar. What Dwolla chose to focus very intentionally on at the beginning was the dollar. And the reason why is our economy systemically operates on the dollar. Our government operates on the dollar. Most of your paychecks probably come in the dollar. Your mortgages are in dollars. I mean, when we think about the size of electronic transactions in the United States and the electronic transactions that are not moving in real time, we're talking in excess of $100 trillion annually. That's a massive amount of pent-up need for a real-time system. And so our desire is to simply help people get dollars from point A to point B. And when we add another currency, we'll consider all currencies, not just digital ones. So, we might look at the peso or the yuan.
Do any of you spend any time thinking about Bitcoin?
I'm still trying to figure out what it is.
Elliot, I'm going to take your silence.
I can't add to that answer. that was pretty good.
Karen, I assume you guys must be thinking about Bitcoin in some form or fashion.
Definitely. It's if you think about Bitcoin as a method of payment, I think it's interesting, and I think some people are experimenting with that. But one of the challenges that you have with Bitcoin is, are you providing one of the basic fundamental services with commerce, right? Are you protecting the consumer if there's a challenge with the merchant? Are you protecting the merchant around things like chargebacks? And so when you think about the merchant population and the service that we're providing to them, that's some of the things where Bitcoin needs to think about and get to a different level of maturity, right? And I think also from a regulatory perspective, in a way, if there's more focus on the regulatory framework that could, provide some opportunity to maybe legitimize it a little bit more broadly beyond the base of early adopters who are like, this is a very interesting investment or this is a very interesting opportunity.
Elliot?
Yeah, I do think the one thing that you have to take seriously about the Bitcoin discussion is the inspirational impact it's having on a certain group of entrepreneurs today that we're simply not dialoguing with. Because there's a bunch of people today that are looking at Bitcoin and saying, well, boy, did those folks screw it up, but I'm going to solve it, and here's how I'm going to do it. And they're right now putting together a pitch book, talking to folks in Silicon Valley and around the country, saying, I have a better way to do this. And one of those would be the topic of conversation, maybe on this panel, 12 months, 24 months, 36 months from now. I think that you can't argue with in terms of its value to what's happening in the industry.
Karen brought up regulation, so let's talk about that. You dealing with regulators on this? Have you talked to the Fed or to? What do they think of your...
we know some regulators, and we know the folks at the Federal Reserve Bank. Regulators are normal people. It's sort of, well, I mean, they are. They're just trying to do their job, and many times they're trying to protect a consumer who, if they call you, they perceive that you may actually be somehow attacking or taking advantage of or lying to. And so if you get punched in the face by a regulator, you're either, I mean, not literally, obviously. Actually, has anybody ever been punched in the face by a regulator? That's never happened to me.
I think it might happen in the reverse sometimes, but regulators might get punched in the face.
I feel like that might be a loose scenario, but a regulator would call because they either misunderstand or you're doing something silly. If you want to last in this business, if you're doing something silly, you fix it, or you help them understand. That's good business.
So I know a lot of folks who work at the Federal Reserve. they're generally older. How do they think about you and your real-time transactions?
I'm proud to say I think they get it.
Yeah?
How many people have heard the term RTGS before? So our economy is largely driven on systems that don't actually have a physical asset transfer as a part of them. So the thing behind the plastic cards and the thing behind the checks are their ledger entries. And these systems were designed years ago by the Federal Reserve Bank that basically architected a way to drive our entire economy virtually.
And RTGS stands for real-time
Gross settlement.
real-time gross settlement, which was designed by the Federal Reserve.
There are many systems like this in the world, but the Federal Reserve Bank does operate one called FedWire, which is pretty gargantuan. And the guys that built it, yeah, they're older, but you know what? They were pretty thoughtful about it.
They're like a Federal Reserve Dwolla.
Yeah, just not consumer connected, right?
Right.
You know, we kind of think of ourselves as if we can take what they have on the other side and connect to the rest of the world to it, and then add other currencies to it. You know, we believe that we're an interoperability protocol that uses the internet to let people move any amount of money from any one location to the other, and we just started with dollars.
How long before you get a major retailer to accept you, do you think?
You know, I don't know. I think there's a point at which you have enough scale that concerns about the viability of the company is no longer a concern. And you know, I'm the same guy talking to a Walmart, is, you know, up on stage today, he talks to a bank, he talks to the investors. And at some point, we'll either grow enough that we'll get over that tipping point, or we won't. But I'm here because I think we will.
Walmart would be the Mac Daddy, right? I mean,
they'd be an interesting one, but I'm actually more interested in some gas station chains. You know, there's not a lot of margin in gas. What happens if all of a sudden there was 2% more margin in gas? Would that potentially move the market? Would that be good for that company? Maybe.
what if you took 2% out of the whole economy? Where would that money go?
You know, go to new jobs, right? Go to new product lines, go to other things. It would not go, I mean, in a lot of things, and we've done a really nice job creating ubiquity with a lot of payment forms, but there's a lot of money that's siphoned out because we have to pay for old technology, old platforms. And old isn't to say bad, it's just to say that, look, the internet can do real-time fraud monitoring across any device in true real time and move money from point A to point B in real time, but not everyone has access to it yet. And we've already built it, and now our challenge is just simply to distribute it.
Jay,
Yeah.
dealing with regulators for a bank that has no branches, what's that like?
I think, see, regulators have a very important function, actually, in the economy. And I think, yeah, well, I don't want him to come after me. You know. So the regulations are set by the Congress and by the executive branch, and they have to execute on that. So what are they trying to do? Safety, make sure that the loans that the banks make get paid back. Regulatory function. Make sure that if the public policy demands that there is equal treatment, fair treatment for everybody, and that's called compliance, and that happens. So regulators are very interested, in my opinion, in seeing that we have the access of financial services to everybody on a competitive basis happens, and that it happens in a way that the providers of financial services are strong, because that affects the economy in a very bad way when that gets messed up. So I see that regulators are friends. They have a job to do. You got to respect them based upon the job that they're doing. And they are not being in any way, in my opinion, once they understand what you're trying to achieve, they're actually being helpful. In our case, we talk about giving access of financial services to the underbanked, to the unbanked, to the millennials who are in the debt, who are looking for help, looking for more higher interest rates to the senior citizens who are living on fixed income. And those are the kinds of things where we have a tremendous amount of support from the regulators on everything that we're doing.
In the pre-interview we did, didn't you tell me that when you don't have branches, it's actually much easier than when you do have branches?
Yeah, you know, our bank right now is called Customers Bank. We are starting a new vertical.
That has branches.
That has 13 branches, and we are $5.5 billion in size, and we are the fastest growing bank in America for 2 years in a row, and top line growth. We're growing 96% a year.
Let's go to the mobile bank, though.
Now back to the mobile bank. Mobile bank is without any branches, no branches whatsoever. Okay, and it's going to be, so it's an independent vertical, and we hope one day it's going to be an independent bank by itself, which we will float. So, but this mobile bank, in our opinion, within 3 years, Customers Bank already, this is Customers Bank, which is going to be the parent company, already has 1,000,001 checking accounts. We believe the mobile bank has a capability of having millions of checking accounts within 2 years.
But you told me something on the phone, which is when you didn't have branches, it was actually much easier to get this started because there's so much regulation embedded in constructing a branch.
That is correct.
And that, to me, reflected an old mode of thinking when it comes to regulation.
Yes, okay. Regulations are behind in terms of starting new stuff, such as if you want to open up a branch, it takes you 3 to 6 months. You got to file reports, legal notices in newspapers. In the local community, you have a Community Reinvestment Act. You have to define who your geography is, what percentage of your deposits are coming from there, and what you are giving back to it.
Right.
When you are a web-based bank, what's your geography? You don't need any approvals for it. None whatsoever.
Yay!
So in a way, regulators are telling you, hey, listen, you want to start a nationwide bank on mobile? No approvals needed. You want to open a branch? You're going to come to us, and we're going to put it out for notice, and we're going to ask people to comment on it, and there could be a hearing on it, all that kind of nonsense.
Why don't you think that J.P. Morgan can go after the same customers that you're going after? Why couldn't they target them?
J.P. Morgan spends 2.5% taking care of landlords and fixed costs.
So you can pay higher deposit
We are
rates.
not going to have that. J.P. Morgan wants $5,000 minimum balances before they waive any fees. J.P. Morgan wants $40 every time you have a $10 overdraft. We will have 0 fees. J.P. Morgan has to pay for all these billboards they have in branches at every street corner.
Are you going to pay higher
Those are
deposit rates?
blockbusters. Yeah.
Okay,
you pay
good.
higher rates, no fees. That's why J.P. Morgan can't compete with us.
Got it. Elliot, regulators, do they help or do they hurt? You want to go ahead?
I'll wait for the applause. So in our business, we have a bit of the challenge where we have to comply with FINRA, which is the brokerage side of the fence,
Right.
and then the SEC. Because we are rule followers, and obviously we're not attempting to skirt any of the rules and bury conflicts of interest, we actually welcome regulators in because they educate us as to where they perceive either weaknesses.
Yes, to say that.
I'm
I'm not cynical, though.
No, I think in some, look, we all lived through sort of the Madoff events. We've lived through lots of scandals. The problem is when you are a business that's trying to skirt the regulation, you view the regulators as the enemy because what you're doing is either illegal, unethical, or just unsavory, and you don't want anybody to know what you're doing. In our business, because we're not manufacturers, we're not hiding any internal margins from producing EBITDA as a result of selling something. So we have the benefit of a business model that actually welcomes that scrutiny.
Regulators, they help, they hurt, they're just a way of life.
So consumers just want to be safe and secure, right? And regulators help facilitate that. So if you're thinking about the payment space in particular, we're moving beyond plastic onto phones, right? We're already online, but moving onto phones. And so how can we ensure that that transaction via your phone is secure, right? Especially in light of data breaches and other things that we've been thinking about. And those are the kinds of things that regulators certainly would want to understand or secure and protected. So, I think that it's really a dialogue.
We have a minute and a half left. Something you would have liked to have said but weren't able to say?
I think that the biggest misconception I run into in the payments world is that, real time's a myth, or, the Federal Reserve's never going to get there. And the truth of the matter is, it's already been created. It's just not evenly or adequately distributed yet. It's available. And in this time, we're pretty much already living in sort of a virtual world. And when I read about a lot of new things like, this other thing has to be the thing that solves this other problem, honestly, the economy is already virtual. Like Google RTGS, that's what drives our economy. You just don't have access to it yet. And over the next, 10 years, the internet's going to give you all access to it. It's going to affect markets, it's going to affect our jobs, and it's going to affect everything. And I kind of like a lot of the hubbub and bubble in the markets about how payments work just seems old. Maybe you don't realize that we're actually already living in a virtual economy.
Jay.
I think consumer banking is going through once every 100-year type of a change. and the customer is way ahead of the providers of consumer banking. Banks consider innovation as having a new computer system installed in their company. That is the typical definition of innovation in a bank. That's how far behind. It is the most inefficient industry in the world. So when you have the most inefficient providers and you have a customer, you're so right, in the digital world, who is technology dependent, don't have to be savvy, you create unbelievable opportunities for disruptors. Unbelievable. I think, like when I was at Sovereign, we bought 32 banks to get 1,000,001 customers. Today, we started a Customers Bank. This is without even starting a bank mobile. And we have more checking accounts than entire Banco Santander Sovereign has today.
Wow.
Already.
Elliot.
Yeah, I think to pick up on Dwolla's CEO's comment, the future is here. It's just not evenly distributed. So the question is not, is there disruption in all of our particular parts of the sandbox? The question is, how many people are adopting and how quickly? Because any major problem that most people have today with investment, wealth management, banking, credit cards, payment, right? There's a source where today you could go and get a partial, if not a complete solution to it. You just have to get out there and understand where the solutions are. But the solutions are already there.
Karen, last one.
So the innovations at MasterCard will happen in MasterCard, but will also happen outside. And what we're increasingly seeing and what we'll continue to see, which is the future, is APIs and third-party developers. So connecting small, innovative boutiques with the scale and reach of what a MasterCard can provide is a pretty impressive set of capabilities.
You should just buy Dwolla. No. Hey, this is great. Thank you. You're not into that.
I got nothing.
Got it.
Thanks, guys.
Thanks, guys. Great. Thank you.